Hey guys, Gil Stokes here. Welcome back to the Weekend Trading Edge. Today we have 4 new trading opportunities and an update on the DKC strategy. So we're going to start here on the euro dollar, and you can see a lot of bullish movement during the week. We had a lot of high impact news events that came out that weren't so much in the favor of dollar strength as the market uses the data to interpret if this is going to be the last rate hike coming up in the end of July, and then are we going to pause or are we going to start decreasing interest rate. There was some yen news that came out as well, with the yen finally deciding not to kind of devalue the currency. So that's playing a role as well. And that's something that we'll revisit at the end of the month. But what we have here is a breakout of our previous level of structure. And we have two things forming here, right? We have a potential bullish opportunity here on the euro, as well as a bearish opportunity. And they both actually kind of work together. So we'll start with the bearish opportunity. What we have here is a potential advanced pattern formation, one of my favorites, but one that I don't actually trade, called the butterfly pattern. And the butterfly pattern looks something like this. There's lots of ways to do it. So if you're someone that's going to trade advanced pattern formations, make sure you decide on a way of how you want to trade this pattern. Butterflies, crabs, sharks, some of them have some really wide ranges for completions, which isn't really a fun thing to do. But in the case of the butterfly, what I like looking for is the 127 Fibonacci inversion taken from, when I draw this on, you'll see it, our A leg back to our X leg, and it looks something like this. Now, the problem I have with butterflies is that it completes outside of our X leg with the patterns that I personally trade, bats, Gartleys, ciphers. They all complete within the X, so I have this natural level of structure to use as my stop placement. The butterfly kind of completes out in the middle of nowhere, and unless you have a significant level of structure looking left, it's hard to really place a structure-based stop loss. And you guys know my philosophy on the market. Structure is the backbone, so everything I do in trading is kind of related to structure. So if I draw a line up here for our butterfly completion, right, you're going to see that we don't really have a level of structure to place stops beyond, aside from all the way up here around, 115s, which is way too high. So that's kind of the risky side of playing it. But it is a bearish opportunity for you guys looking to get short. Now, the bullish opportunity is actually a continuation trade, right? Speaking of this next level of structure, that's where we're anticipating price goes. It's not going to be easy because we are in a period of consolidation, but there is no real significant level of structure in the middle of that consolidation. If we go ahead, I haven't done this yet, but let's see what happens if I bring my volume profile tool on. I'm going to bring it from a little bit higher just to give ourselves some room from our swing high to swing low. It should show me where the interest levels are. You can see there's an interest level kind of right above where we're trading at, about 113.30s, right? So there is still a little bit of room to the upside. Now, if we go down to a 4-hour time frame, what we're going to notice here is we're going to notice that, and keep that 113.30 number in your brain, right? We're going to notice that price action is starting to lose momentum, right? We had a very steep slope on the rise up, and then recently you can see we're starting to kind of decrease that slope. We have the RSI dipping down back under the overbought category as well, giving us an idea that we may see some relief. Now, relief doesn't mean a total reversal or anything like that, but by relief means that we may see the market kind of just like, imagine throwing a ball in the air, right? You throw it, you throw it, you throw it, it reaches its apex, it starts to bend off, and then it comes back down like that. And then if you grab it, you want to throw it again, you throw it again, right? That's what we're looking for when we're looking for continuation trades. We're looking for extensions. We're looking to grab that little bit of a pullback right here and then trade the next one back up. So if you're looking for a continuation opportunity, a bullish trade here on the euro dollar, look or wait for that period of relief to come, right? And then see if you're going to take advantage of the pullback. I'm not just drawing this out. I'm not saying the pullback's going to be right here at 112, but in general, just look for the pullback and the opportunity to trade it up. And of course, if you are a butterfly pattern trader, you can take a short right now, or maybe you do something like this where you wait for a more conservative approach, where maybe we get that little bit of relief, maybe we come back up, test the highs, we get some double top action up here, and then once we have that double top, that gives you a nice base to place your stop above, and then you look to trade it down for that butterfly. That would be a more conservative way of doing it. So a bearish opportunity in the bearish butterfly, a bullish opportunity in the continuation trade. And of course, both can work together, where the retracement from the bearish butterfly, because that's what it is. If you're trading butterflies, you're looking to make profit off of that period of relief. That period of relief can add to the continuation. So you could get the best of both worlds. Next up, we're going to go over to the cable to pound dollar. Similar situation here. However, in this situation, right, if we look left, right, if I get my charts organized correctly, look left, you're going to see that we're right at a previous important level of structure. This was a previous descending triangle, which had a very nice breakout to the downside. And you can see we're trading right in the middle of that. If we look left, right, we got this nice little level of inside structure as well. So I'm looking for a structure-based counter trend trading opportunity here. If you look at how price action has recently moved, we've put in, or at least it looks like we've put in, a 1-to-1 measured move, aka an AB equals C pattern, right? If we bring our Fibonacci retracement out, or excuse me, extension, and draw it from swing low to swing high, we may have some Fibonacci confluence there as well. I'm going to be a little bit short of that 1618, but right in that zone. So I'm looking for a counter trend play here. You can see price action has, just like the euro dollar, given us a lot of dollar weakness this week. Apologize for the beeping in the background. I've got the tier 1 trading chat up, so I hope you guys can't see it. I'll try to edit it out if I can. But we've got an AB equals CD pattern here. So this will be a classic CTS trade. We kind of talked about this in the last, I'm not sure if it was the last Trading Edge video or one of the midweek videos I did. I forget. By the way, I do randomly put up a midweek video, a trading idea. So if you haven't done so already, make sure you subscribe to the channel. That way you're notified when those videos do come. I know you guys are conditioned to waiting for the weekend video, but when I see something cool and juicy in the market, I like to put it up. So make sure you're not missing that content midweek. Subscribe, hit that notification button so you know it's there. Or just make a habit to check every day. That's another way to go about it. But anyway, what we're looking at here is a potential CTS trade, right? We've got structure looking left, not major structure, but a minor level of structure looking left. So we'll get a point there. We have our AB equals CD pattern. We have the RSI overbought. If we were to go down to our lower time frame, what you can look for is a potential double top. So similarly to what we spoke about with the euro dollar, where we look for a retracement, as we gotten already. We look for a retest of this high, and this is going to be a decision point, right? If we violate this high, then we're only looking for longs and continuations higher. But if we can hold, and ideally we would get some bearish divergence on the RSI. So what that means is that we would get equal highs on our price chart, but perhaps lower highs here on the RSI. That's going to be divergence when your price chart and your indicator or oscillator are giving two different signals, basically. Then this can be a nice double top trade with a pretty decent opportunity back to the downside. I haven't looked at this or thought about this yet because I look at these charts for the first time when I do these videos for you, but we don't really have another significant level of structure until the inside one that we just broke right here. Let's just take some Fibonacci retracements from our AB equals CD pattern. We'll take a big one from the full, from the full move, the A leg, all the way to the D leg, right? You see we have 3D2 right underneath that level. And let's take one from our C leg to our D leg, our last extension here. You can see we have a 50% around that level as well. So two decent levels to look at. One, a conservative level will be our first minor level of structure. Up here, you can see right above 129, there's this little bit of a rejection spike there, so a little clue that that's where the buyers are interested in. And then a lower level would be our inside level of structure, a little structure swap right here around our 3D2 and 50% confluence. So lots of potential profit opportunity here as well. If you're someone that's conservative, you can even inch this up, right, instead of this first level right here. Just say, hey, you know what? I got a $1.30 even handled there, psychological number. I don't want to play those games and move from 131.50 or whatever you get involved at to 131, 150 pips. That's fine. Nothing wrong with doing that. You just want to make sure it's within the plan, right? You don't want to, I'm going to put out a podcast this week on trading emotions, and we talk about most of the time how trading emotions are a bad thing, right? Greed and fear. This would be an example of fear where the price is moving. Let's say your initial target is down here, and then as we start moving down, right, it starts going your way, but then it starts getting a little wiggly and you start retracing a little bit and you get scared and you just take your profits out early, right? That is a fear-based mistake. It feels good at the moment because you made money, but trust me, what you are doing is you are sabotaging your trading plan, death by 1,000 cuts, because now you're not taking what you're supposed to take from your wins, and now your wins aren't covering your losses, and you're winning, but you're going backwards, and it's a completely weird cycle. The podcast episode is actually going to be about the positive side of emotions, because we always talk about them in a negative light, but there are positive sides of trading emotions as well. But this is a good example to do that. By the way, if you haven't done so, make sure you check out this past week's videos on the Trading Coach podcast. We're discussing some pretty cool topics each and every week. Make sure you check it out and make it a regular part of your routine, available on your favorite podcasting app, also here on YouTube. But nice double top opportunity here on pound yen. Dogs are barking in the background, so that's a key sign to head over to our next pair. Next up is the euro yen. We're going to be here on the 4 hour. Got some pretty cool moves here on the euro yen this week, but what we're going to concentrate on is something simple, a potential advanced pattern formation. If we look at the recent move down, this is going to be our X2A. Let me just draw this out real quick. Excuse me. There we go. This is going to be our X2A, swing high to swing low. First retracement back up is going to be our A to B. We then get a move down here being our B to C. And if we can make it up to our 886, and the zone is going to go from our 886 to the top of our X leg, this will give us a bat pattern looking for a bearish move. So short and sweet on the euro yen, potential bearish bat pattern coming into a very nice level of previous structure. Lastly, we're going to take a look at the Aussie Canada. This is going to be very similar to what we're looking at on the pound dollar, but a little bit different, and I'll tell you why, right? So you can already see price action has moved up, right? We have put in a nice double top. So if you guys are new to double top, this is almost a picture perfect look at a double top. Price action works up, we retrace, we come back up, we hold. Here's what I meant by divergence on the RSI. You can see that our RSI on our first hit of the top is right here, second hit right there. Now, the one problem that I have with this is that we're not at the significant level of structure. I was going to say we're not at a level of structure, but if we look left, we can see that we do have a nice little structure level right here. And this is a little consolidation point before an elephant candle. These zones are very important. But if you followed my videos for any time now, you also know how I feel about overlapping levels of structure, and that you got to be careful. These were expensive lessons that I learned in the market, but you got to be careful with levels of structure that complete right below previous levels of structure, because typically the ones that are further away, in this case the bullish one, this one is going to be more important. So what that would cause me to do is not throw away the entire trading opportunity, but rather be more conservative. So instead of just looking at a double top here, I would look for a 2618. And a 2618 just gives us more confluence. And what a 2618 does is it's a double top, right? That's the 2. And then we need to violate our V point right here. And then we want to see a retracement back to the 618. That's where the 618 comes in handy, or comes into the naming to 618. I didn't name them, but that's what it is. So we would look like something like this. And then we would look for a selling opportunity if you're super aggressive right at the 618. Or if you're more conservative, you would look for your reason for entry once we get to that 618. And then the opportunity to trade it down. So it's basically looking for a pullback, right? Which is, looking for confirmation of the double top by violating the V point, and then looking to catch that first pullback. So the same way we handle like sideways consolidation levels as well. So 2618 definitely would be in play here, because it gives you more proof that the market is likely to turn around at this level instead of explode up and test the higher level of structure. So before I let you guys go, I want to update you on the DKC strategy. If you guys are newer to the video, this was something, a new strategy that I started working on around the end of last year. And finally got to the point where I started trading it live in April. And what we're doing is kind of giving it a test run, right, before I, create a training course and all that fun stuff and give it to the traders on the platform, because I want to trade it live. I want to make sure it works before I ever give it to someone else. That's just kind of a thing that I do. I'm in no rush to kind of create new training and create new programs and stuff like that. I need to make sure it actually works. So I'm trading it live this year. And if it meets all the requirements, then I'll get to work on making training videos and all that fun stuff and teaching it to you guys. But pretty decent week. I apologize, I haven't updated you in about 5 weeks just because I've been trying to get these videos out to you quickly and keep them short. But anyway, pretty decent week this week. 15 trades, which is a lot, 46%, which is higher than the expected average for this strategy. Usually we're looking at a mid-30s, I guess you can say, is the expected win percentage on this strategy. So obviously it was a good week, so we hit at a higher rate. And about a 4.5% gain return on investment for the week. Now, looking at the totals of year to date, again, this is April. I think April 3rd is when I first started trading it. So we're looking at about 3.5 months. 144 trades, win percentage is 37, which is, again, the upper end of what I would expect. And we've returned about 15.6%, which is, can't do math in my head, too early in the morning, but a pretty decent number. It should be more than that 3% per month, which I typically try to average. So it's been an okay strategy. For you guys that were here from the beginning, or for you guys that are in the know on the platform, it is a wild one, right? It goes through these massive losing streaks. It has a very low win percentage, which are two things I don't really like. I don't have an equity curve printed out for you guys, but even the journey of this year is we started kind of bland, and then we went below into a drawdown for a very long time, then crawled ourselves out of the drawdown, and now we're on a heater. So we've been putting in equity highs recently, but again, it's just really streaky. And that's something that I personally need to see that I can withstand for a full calendar year before kind of making it a major part of my trading. Right now I'm trading with a small account, so there's no really emotional attachment to it. If I ever want to put in some real money to it, however, though, I need to make sure that I'm 100% comfortable, because it does pull on those emotional strings. So I don't know if I'll update you next week. I tend to have a bad memory when it comes to this stuff, but keeping you in the mix with how this strategy is going. Before heading out, hit that like button. If you have any comments or questions, leave them below. And also make sure you subscribe. A lot of you guys watch this video, but you're not actually subscribed to the channel. Do me a favor, support what I'm doing here and what I've been doing here for the last, 10 plus years, and subscribe to the YouTube channel. Also subscribe, follow, like, whatever you need to do to listen to the Trading Coach podcast. It's available on your favorite podcasting app. 3 new episodes each and every week. The podcast is still gaining steam, and that's why I keep promoting it, because we're ranked in the top 10 of best trading podcasts out there, and I want to be number 1, but I need your help to do it. So check out the Trading Coach podcast on your favorite podcasting app. Just don't check it out, but leave me a rating, leave me a review, and make sure you follow, like, subscribe, whatever you need to do to support the show. All right, see you guys next week.